Hello everyone, welcome to the ichimokocharts.com daily analysis for the S&P 500 for Wednesday, September the 28th, 2011. Well, a change of trend today, and we can see we have a candle with a lower high and a lower low, so a new first time frame downtrend. Over the previous 3 days, we saw the market rallying in a first time frame uptrend, and the market found resistance at the bottom of the cloud. Second time that the cloud has held, or third time actually, the cloud has held as resistance in the recent past. Here we can see, coinciding with this area around 12.19, the cloud held as resistance. In yesterday's trading, we see this fairly small green-bodied candle with the large shadow on the top, and the large shadow represented the buyers losing commitment as the market tested the resistance at the cloud. Today's trading, we have a fairly large red-bodied candle, and that red body means that the sellers have made solid net bearish progress on the day between the open and the close. They've also closed the market down towards the low, which means that they've closed this market with very, very strong control. Having said that, however, this 1150 region that we've highlighted previously has held as support for this market, so that's a very big level for the market when trading opens tomorrow. If we do breach that in a bearish way, we have support down at 1133, then down around the swing low around 1114 and 1106. To the upside, we can see that we have this shadow on the top of the candle, and the market found resistance up at 1183 for today's trading. And the shadow represents once again a loss of commitment by the buyers as they tested up to higher levels, and the sellers took control and closed the market down towards the lows. In Ichimoku charts terms, we are still trading down below the cloud, and we have been for some time, so the market maintains its bearishness in the long-term time frame. The market is now today trading back down below the Kijun-sen and Tenkan-sen, so we have a bearish market in medium-term and fast-term time frames. And we can see here that previously the Kijun-sen had turned flat, and price action was attracted back towards there, and we saw that rally over the previous 3 days, and the market found its equilibrium in the medium-term and fast-term timeframes, and now we're moving back away from that equilibrium, and we are in disequilibrium, and it's likely that this trend will continue down to test down to these lower levels over the next few days perhaps. So quite a bearish candle, no sign of bullishness in this market, a change of trend. The trend is likely to continue down. Next, we'll take a look at light sweet crude oil, and we can see many similarities between the equities charts and this chart. We have the market trading down below the cloud, and we've found resistance at the cloud, which we've tested on a few occasions. Today's candle was a fairly large red-bodied candle with a lower high and a lower low, so we have had a change of trend back to the downside. Previous day's trading was a fairly bullish candle, but the market found this resistance at 85.11 and up above here in the cloud is too much for the bulls to penetrate, and they lost the control that they had on the previous day, with the bears taking control of this market. The bulls did attempt to trade to higher levels early in the day, and they traded above this 84 level of resistance, but lost commitment as they were trading up at around that level for the market to close down around 81. If this trend does continue to the downside, we have fairly solid support down below at 80, then 79.25, 78, and around the swing low, roughly around 77. So some very solid support down below. To the upside, if we do see the trend change back again, we do have obviously the solid resistance offered by the cloud, which extends up to roughly about 88, and then a very important level at 90, which was tested on quite a few occasions and we were rejected from very strongly in the past. Now, in Ichimoku charts terms, the market is still trading down below the cloud, and as we've seen with the equities markets, it's been quite some time since we've been trading above the cloud. And so the market is maintaining its bearishness in the long-term time frame. We are now trading down below the Kijun-sen and Tenkan-sen, so the market is bearish in the medium-term and fast-term time frames as well. A fairly bearish candle, likely that we will test down to lower levels, certainly down to 80 and perhaps below. But we should be watching how the market reacts around those levels. We can see previously that there was solid buying coming in a few days ago when the market tested down to those levels. If we see that happening again, we could see the market rally again and test up to these higher levels once again. So what we're doing is reacting to how the market is behaving around these support levels over the next few days. Next, moving on to gold, and here we see a candle that's made a lower high and a lower low, so the trend has changed immediately following the trend change to the upside on the previous day, and today a change of trend back to the downside. So the bulls certainly don't have any power in this market. The bears have really taken control of this market in bigger picture terms, and we can see the swing lows here, swing peaks and troughs, where the market is making lower peaks and lower troughs, giving us a second time frame downtrend as well as a first time frame downtrend now. Fairly bearish candle, large red body candle, telling us that the sellers have made net bearish progress, and we've had a close between the midpoint level and the low, suggesting that the sellers have control of this market, although they did lose some commitment as evidenced by the shadow on the bottom of this candle. By the same token, the buyers lost commitment as they were testing up to higher levels. So still a fairly bearish day for this market. Now, we can see on the previous day that the market tested to the bottom of the cloud, as we've seen in quite a few markets recently on the daily charts, and we have seen price rejection from that area, which is what we expect with our Ichimoku charts. The cloud is a very strong area of support or resistance, and in this case, for yesterday's trading, the market saw good solid downside price rejection from there. We did have this area around 1641 as a potential area of support for today's trading, but the market's blown that away in a fairly bearish way. So it's likely that the market will test down to lower levels around 1559. Looking at the double top pattern that we highlighted previously last week, we did have the breakout, and we had a target that was below 1500. I think it was around 1488. And if this trend does continue to the downside, there is a possibility that we will test down around that level. Some decent support, however, below at 1559, the round number 1500, this swing low around 1530 roughly, and then 1492 and 1478, so some good support below, but very solid resistance overhead with the 1683 level, 1723, resistance from the Kijun-sen and Tenkan-sen, which are around those levels, and certainly all the way up through the cloud up to around 1780. Now, in big picture terms, the market is now bearish. We had the bearish breakout, a bearish signal for Ichimoku charts when we broke out down below the cloud. So big picture bearish, but also bearish in the medium term and fast term time frames by trading down below the Kijun-sen and the Tenkan-sen. The Tenkan-sen has turned flat, and we did see the market attempt to rally back up towards the Kijun-sen. There is still a possibility that the market may rally up towards that area if that Kijun-sen does stay flat. So let's wait and see how the market reacts to that over the next few days. Watch the high of the current candle, which is at 1669, but certainly a fairly bearish day today. Watch the low for a potential continuation of the trend to the downside, which is roughly around the round number 1600.